Good morning and good afternoon to everybody, and thank you for joining us today on our webinar, which is going to focus on the electrochemical side of LDES. And as some of you may remember, we had an extensive session a couple of years ago, and we thought it was very timely to have an update and to also have a look into the future and to see what is in store for this very, very interesting sector. But from Pantokrator, hosting today is myself and also Alex Moody, who I believe many of you know. Alex is our specialist in all things storage, so and will lead our discussion from our perspective on that. So just before I kick off, some of you may be aware we run a number of the webinars in spaces where we're active: EV charging, thermal energy storage, AI as it pertains to sustainability, and Grid 2.0. So this is a continuing of a series of webinars, so we hope you enjoy them. So before we introduce the panel, I'd like to hand over to Alex to give an overview of how we see the sector, and then I can introduce the panel to you all. Thank you.
Perfect. Well, it's a pleasure to be here today. So you see there's a huge opportunity for electrochemical LDES to address as renewables continue to scale out. So already today, we see there's about 350 gigawatt shortfall, equivalent to 3.5 terawatt hours if we assume about 10-hour duration. Markets reacting with strong intention, with about 2 billion invested over the last 2 years. This has led to 2 gigawatt hours of production capacity and 10 gigawatt hours of commercial deals announced. We're also seeing the space start to mature as deals come online, and there's also some consolidation from bankruptcies and acquisitions. So if we look ahead in terms of the trends behind LDES as a bit of a refresher, we're seeing electrification and renewables ramping up, driving the need for increased electrochemical storage. Parallel, there's an increased need for energy security, along with maturing government policies like the UK cap and floor, which are really helping mature and consolidate the space. So if we look into what's driving the opportunity itself, solar is expected to triple by about 2030, which is creating a big opportunity, but unfortunately deployments are woefully behind. We assume that renewables require about 20% storage as backup. This implies that we'll have a 350 gigawatt shortfall by the end of this year, creating a massive space for electrochemical to play in. So if we now look at how have things evolved since our last webinar in 2023, well, overall, it's been a good situation, but there's a couple of challenges. On the positives, we're seeing that there's increased strategic involvement, partnerships, and investments, which is helping mature and validate the space. AI is helping to boost grid services potential. And we're also seeing policy coming in and incentivizing longer durations. On the flip side, though, we're seeing that lithium is increasingly becoming cheaper and longer duration, providing a real threat to LDES players and forcing the refinement of applications. Not too many large-scale projects are operating today, so there'll be some tough lessons to learn. And flexibility is really needed in such a rapidly evolving space where unfortunately seen some bankruptcies such as Northvolt, Ambri, so players need to be flexible to adapt in such a tough market. So if we look ahead and go into some of those announcements, so of the 10 gigawatt hours that's been announced since 2023, yeah, the majority of the public ones we've displayed here, but the more interesting piece is if you look at the public announced projects that are 6 hours plus, the majority is still lithium, showing that electrochemical has a huge space to play in. There's a huge opportunity for it to grow and really capitalize on all this demand. So if we look a bit more in depth at the actual commercialization itself, but we can see that there were extensive announcements, but in 2024, the real focus was building up the production capacity to meet that demand. So as you can see, it's spreading out from 25 onwards for the actual deployments. And with all these production capacity sites coming online, these players will really be able to capitalize on the space. Now, with that in mind, we look at lithium, on the other hand. So lithium is acting as quite a big challenge for the space. In the last 2 years, costs have already gone down 30%, primarily driven at the cell level. The more interesting piece is also on the duration side. So the conventional wisdom a couple of years ago was that lithium tapped out around 2 to 4 hours. This year alone, we've been seeing 8-hour storage projects being announced, and as per our prior data, they make up the majority of 6-hour storage projects. What this means is that players are having to refine their focus. No longer could LDES players focus on the 2 to 6 hour space. They're needing to refine their focus and show their competitiveness to really fill in their niche. So if we look into the investments, there's been about 2 billion that's been invested over the last 2 years. There's a couple of interesting trends within this. There's an increased focus towards later stage and public funding, such as EOS's 316 million raise and Form's Series F. The other interesting piece is the strategic involvement, such as SLB with EnerVenue and Mitsubishi Heavy with E-Zinc. Now, what's all this money gone towards? Well, if we look at the commercialization, we can see it's gone towards deals, partnerships, and capacity. So the interesting thing here is we're seeing momentum continue to accelerate. Now, most of the focus is still North American centric, but we're seeing increasing global interest too, such as VoltStorage's partnership with Aqua and EnerVenue's partnership with Vedanta for South America. Now, the curious thing to close off this session are what's the 6 pillars that we see and we're planning to explore further in our panel discussion. Overall, we see that there's a lot of supportive trends pushing electrochemical LDES ahead, that there's a huge opportunity to be done, renewables and electrification really coming through, and we really need to accelerate the deployment as policy also comes in to help reinforce. But there will be some temperance needed. We need to see the large-scale deployments come in, the lessons to be learned, and we expect some consolidation to further happen as the sector matures. So with that being said,
Brilliant. Thank you very much, Alex. Now I'd like to introduce the panel that we've got today. It's a great panel, as you can see. We've got Brett Simon from E-Zinc, Manny Claassens from EnerVenue, Fredrick Støa from Equinor, and Alex Campbell from LDES Council, as well as John Alper from VoltStorage. So I'd like to kick off with you, Brett. If you can give us an introduction to E-Zinc and what you're up to, and if we could keep it to 5 minutes, that would be brilliant. Thank you.
Sure. Thanks, Andre and Alex, for that excellent introduction. Hi, everyone. My name is Brett Simon. I'm the Director of Commercial Strategy for E-Zinc. We are a long-duration zinc-based battery storage firm with our headquarters in Toronto, Canada, but I work out of our US arm, which is based in Northern New Jersey. So just very quickly, our company's been around for over 10 years. We have about 60 people across the entire company. We've raised over 80 million in private financing and about $18 million in non-dilutive grants. We have 7 patent families with international coverage, and our first field deployment was in 2022, which was a pilot project in Canada, just outside Toronto. And we have 2 more pilot projects that have been secured and publicly announced. One is with the California Energy Commission, and we'll be going in California. The other is with one of our investors, Toyota Tsusho. Both of these will be going in and call it the next 18 to 24 months here. And on the right, you can see our leadership team. We have a team with over 100 years of experience in this industry between them, worked at places including Bain, GE, just to name a few. So a very strong legacy of the energy industry, not only the energy storage industry. So here we see a cutaway of our battery, and I'm just very quickly going to give you a brief overview of how it works. So our battery is what we call a hybrid flow battery. It's not a true flow battery where, traditional flow batteries, you have 2 tanks, one for the analyte, one for the catalyte. Ours is a single container. It almost looks like a fish tank of sealed plastic with aqueous electrolyte inside. Effectively, the way the battery works is when you are charging the cell, you have pellets of zinc that are dropping through the solution and deposit in the base of the cell. And in order to discharge the cell, we use an air cathode in the cell's base to pump air in and cause the zinc to dissolve back into the aqueous electrolyte and create a current to discharge the cell. This is effectively using the creation of zinc as a metal to store electricity. And one of the great advantages is we have a very low capital cost and are able to decouple energy capacity from power. So based on the size of the cell that we build, we can go for durations anywhere from 10 to 100 hours. Our battery has a lot of competitive advantages. A big one is our long lifetime. We have over 15 years expected lifetime with minimal degradation. We have a wide operating temperature range. Our battery is capable of operating in very cold conditions from -10 degrees Celsius all the way up to very hot conditions of 45 degrees Celsius ambient temperature without any need for extensive HVAC or other temperature controls, as you might see with the traditional lithium-ion system. We're an inherently fire-safe system. It's inherently non-flammable with no risk of thermal runaway, and we've designed the system to meet UL certifications and are working toward obtaining them. And from a sustainability perspective, our components are all recyclable and reusable at end of life and are all based on widely available commodity materials. So you might ask, why would we pick zinc? So zinc has a variety of very favorable properties that make it an excellent choice as a long duration storage medium. So if you see this spiderweb chart here on the left side, you can see that zinc, which is the blue box there, has a pretty even spread across energy density, kinetics, reversibility, and stability. And some other materials that are used for storage might excel at 1 or 2, maybe even 3, but zinc really hits all of these in a fairly attractive way without having any major detriment in any of them, which makes it an excellent choice. And zinc is also an excellent choice because it is an affordable and reliable commodity. On the right-hand side, we have a chart looking at historical volatility of some different metals that are crucial to the energy storage industry. And as you can see there at the bottom, zinc has been incredibly stable over the last few years, whereas lithium and cobalt have been rather spiky in some of their pricing. Folks probably remember during the pandemic, sometimes when lithium was going to very high prices, sometimes for sustained periods of a couple of weeks or even a couple of months. So looking at the market opportunity, there really is this space that we see that E-Zinc is perfect to fill. So on the extreme left, we have batteries that have a shorter duration, but the ability to scale to any level of power. Those are your traditional lithium-ion batteries and certain flow batteries. Along the top, you see storage mediums like pumped hydro and compressed air that are able to go for very long durations, but cannot scale to smaller capacity sizes. You really need to get into the hundreds of megawatts to make them economic. But on the bottom right, you can see where E-Zinc comes in. We are something that can scale to just about any size, and we are able to go anywhere from 10 hours to 100 hours of duration, making us able to serve a wide variety of use cases. So very quickly, our market focus, we have three broad, what we call horizons, which are the market segments we're targeting. The first one we term briefly resilience. I also like to call this one grid-connected microgrids. These are customers that I like to say need what I call resilience plus. They need resilience as well as something else. These are your CNI and MUSH type customers who are often in areas that are affected by outages, such as extreme weather in the southern US or PSPS events in California. The second horizon are remote customers. These are remote industries and communities. These are folks that are heavily reliant on diesel, but there are economic opportunities to replace either some or all of the diesel with LDES plus storage. And then lastly are the Horizon 3 customers, which we term quickly renewables. These are the large-scale bulk energy shifting systems on the TNT grid. So this is my last slide here. This is our go-forward plan over the next few years. So last year was all about establishing our new headquarters and our pilot manufacturing plant in Toronto. This year, we are building and internally testing the CEC system with the goal of deploying the CEC and Toyota projects, as I mentioned earlier, in the next, call it, 18 to 24 months. And then in kind of the 2027, 2028 timeframe, we're building toward establishing scale manufacturing and deploying more pre-commercial pilots with commercial sales occurring toward the end of this decade. So I believe I kept to 5 minutes. I'm going to end there and say thank you very much, and I look forward to the other presentations and the discussion.
Brilliant, Brett. That's great to get started. I had a very quick question from one of our listeners.
Please.
Saying, what was the round trip efficiency of your system at the moment?
So that I can't say publicly. We would
Okay,
need an NDA to talk through that. What I
right.
can tell you is it is significantly below what you would see in a lithium system, but that's rather common with long duration
Hmm.
systems. Usually the RTE is lower, but you're also cycling less frequently, and you're often charging from very cheap, low cost renewables. So
Correct.
the round trip efficiency being lower is not necessarily something that will dynamite the economics of a project.
Yeah, it's the LCOS, I guess, that you really look to. Great. Well, thank
Exactly.
you. Thank you, Brett. So let me move on quickly to Manny Claassens from EnerVenue. Hi, Manny.
Hey, thank you for the introduction. I'm Manny Claassens. I am the Vice President of International Sales for EnerVenue, based in Perth, Western Australia. And I'm also electrical engineering technician by trade and a qualified electrician, and here to present on behalf of EnerVenue the technology of long duration energy storage. So one of the things at EnerVenue, we aim to challenge the conventional energy storage with a differentiator with our vessel. As you can see at the moment, that's on the picture. It's a larger system, not as dense as your lithium would be, but definitely a differentiator in the market when it comes to long duration energy storage. So our technology has been around for over 30 years. It's not a new technology. It's actually been used by NASA in the rover, the space station, and the Hubble telescope. And as you know, it's been doing over 200 million cycles. In 2017, Professor Yee from Stanford University refined the battery technology by adding new materials, reducing the cost, and adding a new catalyst. And in 2020, EnerVenue spun out of the Stanford Business Accelerator. And currently, our battery has been tested to doing 30,000 cycles or 30 years life, which adds up to 2.5 to 3 cycles per day. We've got no thermal runaway, and it's non-lithium at all. Our energy storage vessels this year started commercialized manufacturing. Actually, this week we started manufacturing, and we've already deployed 14 pilots across the world. But moving into full manufacturing this year of our 4th generation energy storage system called the Energy Rack. I'm going to talk through everything, but as you know, traditional energy storage challenges, fire risk and explosion risk, high operating cost, incapable of long duration, limited cycle life, restrictions on overcharge and undercharge, harsh climates, flammable liquids, and high chemistry adoption and technology risk. That's some of the traditional energy storage challenges. EnerVenue has most durable and reliable battery technology. We have no thermal runaway, no augmentation required, no routine maintenance, or very little routine maintenance required on the battery system. Very flexible charge and discharge rates of C/2 to C/12, and a 30 years lifespan or 3 cycles per day. Depth of discharge is 100%, so you can charge the battery to 100% and discharge it to 0% multiple times per day without affecting the integrity of the batteries, the battery itself. And it's and we got no restriction on overcharge and over discharge. Our technology has been tested in -40 to 60 degrees Celsius ambient, and we got no toxic lithium, and our chemicals that we use in our battery is easy sourced. And we have a proven battery that's been used in space applications for over 30 years. Explain more about how the battery works on the inside. As you can see, we got the cathode and the anode, and we got a separator in the middle. What happens is that when you charge the battery up, it splits the water or the oxygen that forms nickel hydrogen. The separator, when there's a fire around the battery itself in the building, and the battery gets to a temperature above 170 degrees C, the separator will actually collapse, and the water and the oxygen and the hydrogen will recombine, and that will form a hot steam that actually will vent through the top and bottom valves that will most probably more put out the fire than actually propagate the fire. This is our grid scale applications. We're looking at different applications, C&I market, to use that on wind farms, congestion relief. We're looking at EV charging, standalone BESS for grid and auxiliary services, and solar smoothing and peak shaving. We're also looking in the Australian market and certain areas of the Australian market for energy arbitrage, where there's the battery can be used to be charged via the grid at a certain time of the day and discharged, and clients can actually use that for energy trading as well. So I think this is nearly to my last slide. So we are a very flexible asset. We are safer with no thermal runaway and capable of 2 to 4 hour flexible cycles. And we can perform multiple cycles, charging and discharging at different rates to maximize our clients' revenue. And we also address the growing market for long duration energy storage.
Excellent, Manny.
That's it. That's me.
Thank you very much, Manny. I'm sure we're going to have some input from yourself when we get into the panel discussions. So very, very interesting. Could I now turn to Dr. John Alper, Principal Technologist at VoltStorage, but also, John, I believe you were one of the leaders behind the new iron salt technology. So very keen to hear about VoltStorage. Welcome.
Thank you very much, Andre, and thanks, Alex. Thanks for organizing, and thanks to the other panelists. I'm looking forward to getting into the discussion later on. And to begin with, I'm happy to tell you all about what we're doing at VoltStorage and our iron salt technology. Indeed, I joined the company in 2020 and started working actually in the lab developing that technology. And now I'm happy to be able to get out and educate and get people excited as we move forward in our commercial path. So VoltStorage at its heart is really about developing solutions to help both energy providers and customers maximize their energy value, eliminate curtailment, and supply clean energy around the clock. And the way that we do that is with our iron salt battery. So this is based on a flow battery principle, where, as Brett was talking about earlier, we separate the capacity and the power. So we've got the energy storage media is the iron salt electrolyte, and that is exactly what it is. It's iron, it's salt, and it's water, very low cost. So our capacity is the real economic part of the battery. And then we've got the battery stack, where we do the reactions during charge to store the energy and that generate the power during discharge. And it's in this format that we're able to be very flexible in our duration, from 10 to 48 hours in terms of time, and then scalable in terms of energy capacity from megawatt hours to gigawatt hours. An important part of our technology is also our health management system, which I'll talk a little bit about later, that enables us to return our battery to an initial state of health at the beginning of its life. And that enables us to be really very confident in saying that we've got a 20+ year lifetime with minimal degradation. It's highly temperature stable, and we're using only abundant and non-toxic materials. Here we can take a look and see the main components of the battery. So we've broken it out into the electrolyte, that's the storage, the energy component, the power module, those are the stacks. And we've also got a rebalancing or health maintenance module that, once again, we use that to restore any capacity degradation that happens from side reactions during the course of the battery life. And you can see that we can scale this. Here we've got a rendering of where we expect to get to at scale in 2027 beyond, where we're thinking about really a building for our stacks, thinking about 50 megawatt blocks, scaling up to gigawatt hours of storage, using industrial sized tanks that can bring us to a very low cost once we get into these longer durations. A couple of key points here to highlight, I think, are, again, our capacity is being stored in that low cost electrolyte. So that means as we increase the duration, as we increase the energy capacity, we're decreasing the price. And we're also looking at a very long lifetime. That scalability is also flexible. The duration is flexible, customizable to the customer needs. and there's no geographic requirements. Our chemistry is very robust to high temperatures. We've operated battery cells up to 55 degrees Celsius in the lab. We're confident up to 50 degrees Celsius ambient for our systems. And we're using only abundant and safe materials. It's an aqueous electrolyte, it's non-flammable, and at the end of life, everything's fully recyclable. And we see this being the economic solution in a variety of use cases, including wind and PV firming, 24/7 supply for industrial customers, and as an alternative to gas peaker plants. I'd like to highlight just one use case. So we're doing a lot of modeling here at VoltStorage using our iron salt battery simulation tool. And we took a look for a potential customer, a wind park operator in Ireland, and looking at their wind speed variation over the course of a year, we were able to size a system. It's 48 hours to achieve 95% availability for their base load. And at 100%, using 5% of the grid to get the rest of the energy needed for the complete coverage, it's at 50% of the cost of the grid, leading to a project payback time of less than 5 years. So that's just one example of where we fit in really nicely into this grid scale applications. So right now, our headquarters, where I'm located, is in Munich, Germany. That's where we're doing our development. We've also opened up a branch in Austin, Texas, an American branch. And we're also backed by a number of tier 1 investors. It's an international team with many years of experience in the energy storage industry between them. And just to give you an outlook, so we were founded in 2016. We've been developing the ISB since 2018. This year, we go out into the field with our first megawatt hour scale installation with a customer here in Germany. And we're looking forward to 2026 going into the field with our first 20 megawatt hour pilot scale systems. And with that, I'll hand it off, and I'm looking forward to the discussion later on.
Excellent, John. Thank you. That's brilliant. Now, changing gears a little bit, I'd like to introduce Fredrick Støa, who I believe many of you may know or know of, Senior Investment Manager at Equinor Ventures. And I think it'd be interesting, Fredrick, one, to see how Equinor is positioning itself vis-a-vis the space, and also give us an investor perspective, because I think that would be a very nice counterbalance to what we've heard so far. So welcome, Fredrick.
Thank you so much, and appreciate being here in this excellent panel. So what I'll try and do, I'll start with an overview of Equinor as a company, and then I'll drill a bit further down into Equinor Ventures and what we do. Equinor is a familiar name to some and not all. Equinor was founded in 1972, was called Statoil back then, headquartered in Norway, and was originally the national oil company of Norway. We changed our name to Equinor, I believe it was in 2016, really to underpin where the company was headed, not where we came from. We operate in about 35 countries worldwide, and consider ourselves as a broad energy company, more so than an oil and gas company, even though oil and gas revenues still form the backbone of our production and P&L. Going forward as a company, what really dominates the internal dialogue is how we can transition into a broad energy company with increasing contributions both in production and revenues from renewables and low carbon solutions. We may probably have one of the simplest strategies in the industry, and it's summarized as always safe, high value, and low carbon in everything that we do. So when it comes to Equinor as a broad energy company and our journey through the energy transition, we updated just a few weeks ago our energy transition plan, which is a concrete plan that we as a company have put in place on how we target to reach our emission reduction targets, which are 30 to 40% reduction by 2035 and net zero by 2050, and what steps we aim to take to get there. This involves both very forward-leaning ambitions in carbon, both capture, storage, and transportation of 30 to 50 million tons per annum by 35. In renewables, Equinor today has 2.5 roughly gigawatts of installed capacity, with another 4.5 gigawatts under execution, with an ambition of 10 to 20 gigawatts by 2030. Since today's topic is long duration energy storage, Equinor does not currently have any LDES assets under operation. We have 2 battery assets, one in the UK, or 2 in the UK and one in the US, so about 100 megawatts, and another 150 megawatts under development. Equinor Ventures is organized in a relatively new business unit in Equinor called New Business and Investments. This unit is the sole unit inside Equinor with the mandate to identify, test, and subsequently scale new business opportunities outside of the core. So far, this includes direct lithium extraction and carbon removal to X. And Equinor Ventures' mandate here is twofold. One is to provide optionality for such new business growth outside of the core, at the same time that we have a mandate to support the strategy of Equinor's core business. As such, and as our Equinor's corporate venture unit, we are driven strongly by creating strategic value for Equinor, and underpinned, of course, by healthy financial returns. Our strategy is relatively simply summarized, is to invest in and collaborate with innovative companies that drive the energy transition, create scalable opportunities, and generate long-term value. In order to operationalize this, we have organized Equinor Ventures in 5 thematic teams that cover Equinor's energy transition strategy. So as you can see, these include carbon management, emerging fuels, critical resources, future operations, and lastly, power and flexibility, which is where I sit and which is where our interest in long duration energy storage sits. We have 2 portfolio companies in LDES, Elestor, a Dutch flow battery company, and Raygen, which is an Australian company with a combined solar and water-based thermal storage technology combined. We see that long duration energy storage has a valuable role to play in the energy system, and I guess we'll come into more of the nuances and the perspectives in the panel debate starting very soon. So very looking forward to diving into some of the details here. Thank you.
Thank you very much, Fredrick. I wanted to now turn to, last but certainly not least, to Alex Campbell, Director of Policy and Partnerships from the LDES Council itself. So welcome, Alex, and please intro a little bit how you see what the prospects are for electrochemical LDES and any insights onto government policy. That'd be brilliant.
Thank you, Andre. And if my Wi-Fi is flaky, please let me know and I'll turn off my camera. My reception isn't too great here, which is entirely my fault. So yes, I'm Alex Campbell, Director of Policy and Partnerships at the LDES Council. So just super briefly on the council, many of our members on the call today, great to see you. We are an industry association, as the name suggests, focused around long duration energy storage. So for that, we have over 60 members, including technology providers, representing the full range of LDES, so as well as electrochemical. That includes mechanical, thermal, and chemical forms of storage, and then some of the biggest energy companies in the world as well, as you can hopefully see there. We define LDES as the ability to discharge energy continuously for 8 or more hours, and we're a member of the Global Renewables Alliance alongside partners in the wind, solar, green hydrogen, hydropower and geothermal sectors. So just a little bit about us. So hopefully none of this will come as news to anybody joining the call today. The world is undergoing a fundamental energy transition, and the really big important point here from the perspective of energy storage, whether that's electrochemical or other forms of storage, is that shift towards mainly wind or energy systems dominated by wind and solar PV. And clearly we need to capture that excess energy when it's available, and then be able to use it when it's not available. So that's the fundamental case at a global level for LDES in general and electrochemical storage specifically. So we've dived into a little bit more detail about what it means for LDES globally. So that's 8 or more hours worth of storage. Analysis we did with our partner Systemic last year found that over 7 terawatts of LDES could be needed by or in a net zero energy system. And obviously we can't just click our fingers and get to a world which is entirely net zero ready. We need to have a pathway to get there. So we looked at 2030 targets. What would we need realistically to make sure the world is on track to have that low carbon energy system? And we found around 1 terawatts of LDES, of which more than half would be on the thermal side of things, but on the power side of things, so including electrochemical, there's a range of somewhere between 175 and 425 gigawatts of storage capacity needed by 2030, which is a huge amount compared to where we are today at a little over 100 gigawatts, 115 gigawatts in 2023. And most of that is pump storage hydropower. It's not the electrochemical stuff, which we really need to start deploying at scale and quickly. So if we can go to the next slide, please. We've identified 7 enablers, as we call them, to really unlock that deployment. As you can see here, that includes raising awareness of LDES technologies through events such as this, conducting an assessment of needs, so really understanding what the system needs, setting appropriate targets. We've seen, for example, from the offshore wind sector in the UK, how progressively ambitious targets for offshore wind has unlocked investment in the supply chain. Pre-commercial funding is still needed for the more novel technologies and to help those technologies which have started to deploy to move to the next phase to mass deployment. And then critically, market access, long-term revenue visibility. And I think we'll talk about this a little bit more in the Q&A, the types of mechanisms that are needed to really provide visibility of revenues over a prolonged period of time. And then, of course, on grids, we need to have sensible grid pricing, which reflects the flexibility provided by storage assets. And then, of course, you need to have a connection to actually be able to connect to the grid. And we know in lots of markets around the world, there is a huge backlog at the moment. So critically important for policy to work with stakeholders to unlock that. So I'll just run through some examples around the world of where we're seeing some of these enablers unlocked or put into action. So our partners in the India Energy Storage Alliance, they organize a World Energy Storage Day once a year. I think it's in September. In terms of conducting assessments of need, we know that the new EU electricity market design, for example, will require EU member states to assess their flexibility needs. We think that will demonstrate a strong need for LDES. We need to see targets in place. I've already mentioned that. And for example, the Irish TSO has undertaken an assessment and proposed a target. Lots of other countries and policymakers have done similar types of activity. Pre-commercial funding, the previous administration in the US has put a lot of money into LDES. Remains to be seen whether the new administration does that. The Chinese, of course, working very hard on this, as are many other markets or countries around the world. Yeah, just talking about this long-term revenue, even visibility point that I mentioned earlier. In the UK, lots of you will be aware, we've got this cap and floor mechanism coming into effect, which will provide a minimum floor revenue to investors or developers over a prolonged period of time. And in return, there'll be a cap where some money is returned to consumers. Similar approach in New South Wales with the long-term energy service agreement contracts. In Italy, slightly different approach being applied with the system operator Turner procuring storage assets there through a fixed price mechanism. We believe the contracts will start to be awarded later on this year. Electrochemicals certainly feature heavily in that, certainly lithium ion, but also up to 10% of the contracts for the capacity contracted will be awarded to more novel types of storage technology. So there's lots of different mechanisms being considered and deployed around the world at the moment. And then just a quick shout there to Germany thinking about legislation around more efficient grid pricing mechanisms, and the ability also, again, showcasing Denmark to actually get a grid connection more quickly if you're not requiring a firm connection. So if you're willing to not take electricity from the grid at times of peak demand, there'll be a shortcut, a faster access to the grid there, which makes sense, of course, for storage assets. So I think one more slide from me. Just if you need to know more, please do visit our website. We've got plenty of reports on there, and I think that's back to you, Andre and Alex. Thank you.
Excellent, Alex. Thank you so much for that. And, it's refreshing to see that breadth of public support, in a market where, I hear a lot of people saying, well, the pendulum is swinging the other way and so on. But there's a huge amount of support out there. And I think you've given a very good overview of that. So thank you for that. So now wanted to turn to a panel discussion, and maybe I could kick off with a question that we receive a lot, and I'm sure is at the top of your minds is, what are the main challenges that are, facing the electrochemical space? Scale is often mentioned, and, it also economics, cost of storage or availability to scale, or, going beyond pilots. I thought maybe if we could just, open it up into a cross discussion, and maybe start with you, Brett, given that you kicked us off in the very beginning. Kind of, any thoughts on what you see are obstacles and ways to get around it for, ultimately making this a scale industry, which is kind of, a key component of our energy network. What are kind of the steps? And I think when just doubling back before I hand over, I think Alex's last couple of slides were really interesting in the sense of they're trying to show support every step of the way. And I think where are we in that map?
Yeah, I mean, it's a great question, Andre, and there's a lot to unpack there. So in the interest of brevity and not taking too much wind out of the sails, I think one of the biggest things for LDES is we need to respect that the policy and market structures for the energy industry in the world were created for a very different paradigm, right? There have been electric grids now for roughly 150 years. And when they were initially established, it was all centralized generation, wires taking it to the endpoint, electricity was consumed. But in the last, call it 20 years, we've shifted significantly as a paradigm. We have a lot more distributed energy resources. We also now have bidirectional flows of energy coming from electrochemical and other forms of energy storage. So that creates a lot of challenges. And what I think LDES specifically needs is it needs a FERC Order 841 moment. I've said this a few other places, but if you look back at the US storage industry, FERC Order 841, which happened back around 2015, I believe, was a big piece of moving storage in this country forward. It was basically an order by the Federal Energy Regulatory Commission in the United States, effectively saying that ISO and RTO markets must acknowledge that storage can provide different services and allow storage to provide it and compensate storage for it. And it took, after the order was issued, it took years. It took about 5 years for ISOs to fully comply, but that allowed more opportunities for storage, albeit practically all of it sub 4 hour. So we need some sort of market reforms here to make sure that longer duration storage can be compensated for what it can do. Most storage capacity markets, if they exist in the US at least, generally are for 4 hours or below. Different other compensation mechanisms tend to benefit systems kind of in, call it, the 1 to 4 hour range. So I think this in terms of actual steps that need to be taken, obviously there's an education component, educating policymakers. Then there's a component of working within the industry, working between, ISOs, utilities, developers, technology providers, to make sure these rules are written in a way that are fair and don't needlessly benefit or penalize any specific technology class. And it's not going to be a fast process, right? It's going to be something that there's going to need to be a lot of discussion and rulemaking. So the earlier we start, the better.
Yeah. No, excellent. I was just wondering, Manny or John, from your perspectives, anything to add from Brett's comments?
Sure, I'd be happy to. And Brett said a lot of things that I agree with, that we agree with here at VoltStorage. I think one exciting thing is we are starting to see that the LDES market is coming to us. So we're starting to see a lot of RFPs coming out for longer than 8 hours, specifically non-lithium. For instance, the Salt River project in Arizona, the last New York CERTA bulk energy program call. And so that is really positive. But I think there is still much work that needs to be done in terms of the market rules, as Brett pointed out. And I think it's also on us as the LDES electrochemical community to build trust in the public and in our potential customers that our products are going to last as long as we say they're going to last, because I think that's an important aspect of our lifetime cost of storage beating lithium, is the fact that you don't need to buy more capacity after 10 years, and who knows how much that capacity is going to cost depending on the price of lithium in the coming years. So I think that building that trust is important, and it's a bit of a chicken egg problem there as well, because we need to deploy the projects in order to show the trust, and that's a challenge. So having more support for those early stage deployments and those technology demonstrations that are really publicized to build that trust, I think, is important as well.
Yeah,
Manny?
I totally agree. I think proving the technology in the field is definitely a number one that has to happen. And I think the second thing is scaling, so we can get our cost down per kilowatt hour or per megawatt hour to compete with lithium. But also education is very important. Working with off-takers and consultants to teach them about long duration energy storage. So when they do put out RFPs and RFQs out to the market, that they don't just specify one particular technology, but actually ask for different technologies on that RFP that can be submitted on that RFPs, which I'm seeing it's now changing. But we still find that some RFPs are just asking for a particular technology.
Right. Okay. Fredrick, do you have
Yeah, I have two nuances which I think could be relevant to discuss. One is I completely agree that market mechanisms are the key here to underpin commercial deployments of LDES. But one nuance that I think sometimes is missing is not the discharge, but the charge of LDES. From a societal point of view, what is a key property of LDES is to be able to absorb excess renewable production, for example, in periods of high wind, which can sustain for relatively long periods of time, where if LDES can demonstrate a lower cost compared to curtailing that wind, then that energy is not lost. And to find out how we can remunerate LDES for that value to society. And the second nuance is what some people typically call virtual transmission. So in the same vein of volatile renewables, in periods of very high renewables production, grids are typically not scaled to handle the max capacity of renewables. That's another, I think, relevant use case for LDES of sort of balancing out the very peak loads on the grid and supplying that when the renewables produce less, again without losing any of the energy, but to mitigate the capacity constraints that do exist in some cases in the transmission and distribution networks.
Yeah, no, very interesting comment, Fredrick, which I guess ironically, given that the grid is kind of slower to react, and in some cases needs to double or triple in size, and it's doing so very slowly, it actually opens the door for flexible assets, of which LDES is a key one. So in a way, it kind of works in LDES's favor. But very interesting comments, because we see more and more negative energy prices in Europe, and LDES can be a very big beneficiary of that. Let me turn to a thought that we're trying to figure out on our own side, whether how important it is whether the rise of LFP, right? I think I think Alex Campbell, you mentioned, LDES now today is defined as 8+ hours. I think when I joined, it was further down towards the 4+, and whether we're kind of shifting a little bit to the right because LFP is cheaper, it's more mass produced, but I mean, there's still a lot of hours in between, 8 hours and 100, and just wondering does the community see LFP? I mean, is it a threat? Is it something that actually pushes the LDES members into an area where it's a more definable sort of zone to operate from? I just wondered how it's being perceived.
I'd be happy
any
to jump in here
yeah
in terms of how we're perceiving it. So, I mean, I think we've all been if we've been paying attention, I imagine everybody on this call has been. I mean, you're right, lithium ion prices continue to drop, it seems, although there's also volatility. I mean, 2022, they went up. Right now, the price is very low because EVs haven't taken off the way that those were expected. So the market has a glut of that, and we'll see what happens to LFP prices in the next 10 years if the EV prices go up, and then there's a competition for resources. And I think that that's an important thing for people to think about when they're considering long duration storage. I mean, it's been talked about in both Manny's presentation and Brett's and mine. I mean, what is being offered by our solutions is also that long lifetime, so that in 10 years, you don't need to replenish the capacity at who knows what the prices are going to be. So you said LFP is a lower cost. I would argue that it's not lower cost. In fact, when we look at the lifetime of the storage asset, and also when we're thinking about scaling out to longer durations, I mean, I know that for the iron salt battery technology, as we go to longer durations, that LFP is not reaching 10+ hours. Even the CAPEX installation cost for AC block, we're expecting to be lower than even the lowest projections for LFP. So I think those are some important points to think about when thinking, is LFP a danger? I see for the ISB, and I see from the other presentations that there are many reasons to say that electrochemical LDES, when done right, is beating LFP at those durations.
Yeah.
Yeah, I agree. And I think it comes back to what I said earlier. I think there's a lot of education needed in this industry. I find a lot of clients talk about CapEx, always CapEx, but never look at the LCOS. And when they sit down and do an LCOS and they realize no augmentation and take a lot of factors in consideration, and one important factor never been considered is insurance. The insurance cost, if you have a battery that can actually catch fire, what does that cost? And once they start doing a good financial model and they compare the LCOS, I do believe that lithium is not always cheaper.
Absolutely. Alex Campbell, I believe you have a comment.
Thanks. Yeah, I mean, just to add, from a public policy perspective, of course, that diversity of technology solutions is really important as well. And cost is clearly one aspect, and lifetime cost super important. But if we've been watching the news in the last 24 hours, we'll realize the global economy is going through some slightly difficult times at the moment, and diversity of raw materials and these sorts of considerations are critically important for policymakers too.
Yeah, absolutely. Good point.
I can briefly chime in there as well. And I think the supply chain in general is becoming increasingly important. And for the technologies we've heard about today and other also non-electrochemical long duration storage technologies typically benefit from common widely available materials. I think having control of your supply chain is an underappreciated feature of long duration storage. But I think another question, which is also, so what can we do about the competition or the threat, or however you look at the relationship with LFP? And that's both looking at how LFP or lithium-ion batteries became so successful in the first place, they benefited from a price-insensitive beachhead market in consumer electronics, and were able to scale. And why was this a convenient technology to scale? Well, it consisted of many small units, which means that you can benefit from learning very fast. And if there's one feature that is typical for successful large-scale projects, is that you're able to replicate and learn for subsequent installations, and therefore reduce the cost of your next marginal installation. So I think finding ways of manufacturing and scaling based on not a series of first of a kind, but getting on an nth of a kind philosophy is also very important in order to outcompete the cost levels that we're seeing from LFP.
Mm-hmm. Yeah. And I just think coming back to the kind of government support and across it, I think it's when we looked at the California Energy Commission, they were very strategic in saying, well, here's a 20 megawatt project or megawatt project for one company. There's another 35 megawatt hour project for another company, really trying to say, okay, we give you these, tens of megawatt hour projects. It allows those companies that are able to deliver something in the kind of foreseeable future that leg up, because I guess everybody, particularly at the utility scale, they want to see scale. They want to see resilience and reliability. And I think giving small projects, I think was kind of a stepping stone there. But I think there's another question that's been popping up among our listeners is there an increasing role of strategic partners to be had here? And I thought maybe I'll start with our three technology providers, John, Manny, and Brett. And really, because I believe you all in your own ways have, interface with strategics. And given this is a long haul and it's going to be a very large industry, what are your views on strategic involvement and using that as a kind of growth platform going forward? Maybe I'll start with you, John.
So as shown, we have, for instance, signed a memorandum of understanding with Aqua Power, and it's been very useful to be able to take a look at their data and to help us to support our simulation tool. As I mentioned earlier, our ISB simulation tool is really important for us to be able to educate potential customers and investors, like how does our solution fit into their system in order to support that. So in that sense, strategics can be very beneficial, and I think it's of course going to depend on finding the right ones that can support growth and not necessarily define a path that isn't the one that wants to be taken. So it's always a balance, I think, that needs to be found for each company in terms of the right way going forward.
Mm-hmm. Mm-hmm. And Manny, EnerVenue has a lot of experience with strategics. Be interested to kind of hear your views.
Yeah, you know what? I think having strategic partners are very important. We've worked with RWE and in Australia with Avid Group, and there's a couple of other groups we are working with at the moment globally. And I think they working with them to open certain markets are important. They actually become your voice as well, teaching the market about your product, but also I want to look for the right word now, but working with strategic partners does open doors for us. I found it in Australia with strategic partners to be able to find open doors with large utility scale utility providers in Australia that actually want to do pilots with our projects. I think without that, that's actually what I wanted to say, is actually taking them on a journey with you. They need to understand your journey, where you are at, when are you manufacturing, when are you be able to ship. I think it's important to have someone that supports you through the whole journey, from R&D to manufacturing to supplying it to the market.
Mm-hmm. Yeah, interesting. Brett, any thoughts from you?
Yeah, sure. So we at E-Zinc have had strategic investment from folks like Toyota, Mitsubishi, Eni, just to name a few. And I think there's a lot of value that our investors find in technology like ours, right? I mean, there's obviously the technology aspect, right? Long lifetime, high performance, low commodity material cost, all those great advantages. But another piece of it is that they see a long-term potential to actually deploy E-Zinc systems within their own business lines and with partners. So they see a clear use case need that an LDES solution such as ours can fulfill. So there's that strategic piece where by investing in us and working with us, they can improve our technology and get preferential access in some cases to our technology to deploy for these specific use cases at industrial sites.
Yeah. And maybe I'll turn to you, Fredrick, because I think some players look at you as a financial investor, others look at you as a strategic. I guess it depends on, how deep. But, from your perspective, what are the technology companies, not just on this call, but generally in the market, what do you think are the kind of key things that you as an investor, and I'm thinking generically when I say investor, would need to see from them?
Sure. So from Equinor's point of view, of course, as a strategic investor, we will look for companies that form a fit with Equinor. So that's the position that we will take, be it the fit between the technology and market mechanisms where we might operate, are there any geographical constraints, etc. But I think there are two elements that I'd like to highlight here. One is, of course, cost. What are current costs? What will cost look like at scale? And what is the roadmap between the current state of the art and to scale? The secondly, which I think is underappreciated, is the company's business model, i.e. how do you actually intend to earn value, extract value? And how do you plan to get your technology into the market? I think that's under-communicated by technology companies and under-appreciated. For example, who do you foresee will actually develop your projects? Do you depend on others to do the developer role? In which case, what risks do they see, and how can you support them to make sure that you don't give the responsibility of scaling your own technology to others? Secondly, do you intend to own and operate the technology? Do you intend to develop it yourself? In which case, do you have capital to do so? Are you set up with the skills and the employees to actually develop your projects? Basically, from technology companies' point of view, the way that we engage with them is be less focused on the actual technology. Of course, that underpins everything, and communicate and make a credible plan for how you'll get it into the market and have a meaningful role for yourself in those projects.
Oh, very interesting. And Alex, the LDES Council, at least from our experience, has been incredibly proactive at bringing together, right across the spectrum, all the electrochemical players, as well as others, thermal and mechanical and so on, but with the kind of large pool of strategics. And just, if you had any thoughts to share with us, it's kind of, you create that melting pot to increase the interaction among the players. And you see how that's been happening so far over the last couple of years, and any insight into kind of how that's looking going forward.
Yeah, so I think one of the areas where we can see some real value when we bring our members together, including not just the technology providers, but some of the bigger users or aggregators of energy, is in some of those use cases which are perhaps still directly touched by government and public policy, but are also kind of generating interest in their own rights. And that's things like data centers, and of course the increased energy demand expected from AI. So that's an area where, as like I say, still need government. Government obviously plays a critically important role in regulating the grid and in setting the policy frameworks and so on. But we are seeing many of our members having those conversations about the behind the meter solutions, if you like. And I think that provides a real opportunity. And you know, there are similar but different use cases out there, remote grids, you know, remote mining operations around the world, where electrochemical or other forms of LDES compare quite nicely with solar in particular, depending on the geography, or also potentially wind. So, you know, those types of partnerships, I think we see as being, you know, we're starting to see those coming forward, and obviously we want to see them bloom in the future as well.
Okay. I guess, you know, just not a pre-planned question at all, but, you know, really timely as of what we've seen with the trade initiatives coming out of North America. And I think, Fredrick, you intimated that it will have a bearing on it. And I just wondered, just going around the table, any reactions kind of, you know, off the cuff? Is this positive? Is this negative? And it could be a mix, but just wondered if, you know, any of you had kind of quick reactions to the announcements on the trade barriers.
Happy to kick off. I mean, I think we clearly, the world is changing massively, rapidly, and so on. We all know this. There is an increased focus and emphasis on things like energy resilience and competitiveness. We are seeing that not just in the United States and other parts of North America, but renewed focus in the EU on developing homegrown champions who can provide the technology solutions. We're seeing that in many other parts of the world as well. The trade tariffs are just one of many components that are currently on the going into the mix, shall we say, at the moment. And I think for some markets, the energy transition remains critically important in decarbonisation. And I put the EU and the UK in that category, and Australia and markets like that. There's a bit of a reframing in other places to kind of stress energy resilience and security and competitiveness. And I think we'll see all of those factors playing out in the near term.
Yeah, well, interesting. Any thoughts? I saw, Manny, you were shaking your head.
Yeah, I agree what he's saying. And Alex has got it there, but one of the trade challenges on trade, maybe it will equal the playing field a bit more. Understand with the trade tariffs, it's a lot of it is also aimed at lithium. So how that might change in certain markets would be quite interesting to see. For our LDES manufacturers, how that will now affect the market when you want to bring your product into the US or Europe. Would be interesting to see where that goes.
Good point. John.
Yeah, and I think that it's clear from the last couple of months that it's really hard to know where things are going to be going in the future when it comes to the state of how trade is done. But I think it highlights an important aspect of the VoltStorage philosophy, which is thinking about building our technology around very abundant resources that can be locally sourced. So for us, we're making our electrolyte, which, as you can see from the tanks behind me here, there's going to be a lot of it in our systems, and we do not want to be shipping that everywhere. But when we're thinking about using iron and salt and water, we're looking at local resourcing. And in fact, one of our patents is on how we can take industrial waste streams from steel or titanium production and turn it into our electrolyte. And also the key components that go into the stacks in the building back there are also all, there's globally developed supply chains for that. So I think that if we're also talking about sustainability in our products, thinking about local supply chains should also be part of that. And maybe the tariffs is encouraging us to think harder on that.
Yeah, no, absolutely. And, it kind of, behind all that, we do see there's a doubling or tripling of need of electricity. So, while, barriers may be coming up, the depth of each market is increasing quite dramatically, right? So the economics or the scale is kind of in the favor of LDES, I would say. medium term. And the challenge we've seen is, can those companies that currently have a product that's in pilot, what are the steps going from pilot to several demos? And that's when, the expenditure level goes up. But and that's where we find many of our discussions, and I guess the challenges for the rest of 25 and 26. So what I thought I'd do is, sorry, Brett, you had a comment.
Yeah, thanks, Andre. I wanted to kind of go a little deeper into one thing you said, which is the fact is we need an all of the above energy strategy. There's energy demands increasing globally. And I was just at a conference in Dallas last week, and a consistent theme is that certain technologies are sold out. Natural gas turbines were cited probably at least half a dozen times across panels and presentations and discussions I had. And more or less everyone agrees, if you haven't already ordered a natural gas turbine, you're not going to get one before 2031, maybe even 2032, if you're lucky. So that means, obviously natural gas, reliable technology. We've used it for decades here. But there's going to be needed other technologies to support the growing demand for electricity that's occurring across the world for some of the trends that have been identified here by Alex and others. So I think that's something that's worth thinking about and being aware of. I think the other thing that needs to be thought of as well is also uncertainty, right? With a lot of these different trade efforts that are going on across the world. There's obviously we know the levels today, we know the deadlines for when things are going to happen. But as we've seen in the last few months, sometimes those deadlines can shift, sometimes deals can be worked out. So to quote Yogi Berra, prediction is hard, especially about the future. And that means we as companies have to be, we have to plan ahead, but we also have to be flexible in thinking about how we deploy our technology and how we develop our business models.
Yeah. No, very, very well put, Brett, and thank you. We're coming up to time, and just to remind folks, this session is being recorded. It will be on our website. It'll also be made available, I think, on our YouTube channel as well as Spotify. So, and the presentations will be available. So for those of you who kind of couldn't stay for the whole thing or attend, they are available. But before we dial off, I just thought maybe go around the table, any sort of parting thoughts from our panel, and maybe I'll start with you, Fredrick.
I think so there are so many things that we really haven't covered here, but I think it's worth really reflecting on. Perhaps one of the considerations that are missing is how to really deploy the first utility scale, first of a kind projects. And what does it take to realize that? Well, financing and figuring out how to address the concerns from project finance institutions, banks, private investors, for that matter. Which of course could link back to our discussions on strategic partnerships. One valuable feature of strategic partnerships, in my opinion, if done correctly, is to combine the balance sheets and the rigor of established companies with innovation of startups in things like performance guarantees and warranties. If you can have a strategic partnerships where the strategic partner can provide those guarantees and warranties, that could de-risk financing and, in a sense, set off a virtuous circle.
Yeah. Good point. Maybe Manny.
Yeah, for me, from my side, I just want to say, as we are on the LDES market, we have clients that is looking for a longer duration battery storage. That's an alternative to lithium that can provide no augmentation and a safer battery that doesn't catch any fire, or it's environmental friendly. And that when you put it in the ground, it will sit there for 25 years plus or 20 years plus. I think that's what we have to aim to do as LDES manufacturers. It's not who's going to replace lithium, it's who is going to be on the podium next with a groundbreaking technology that actually delivers.
Yeah. And as Fredrick was saying, it's got to get financeable or even bankable at some point. So maybe hand over to next John.
Yeah, thanks again for organizing the panel. I thought it was a great discussion. And to leave, I think it's great to remember some of the things we talked about. The market is starting to come to us. It's growing. And here at VoltStorage, we're really excited to put our first unit into the field. And as we said in this building trust, to show, for instance, our health management system and how we can continue to restore capacity even as it fades at a very slow rate over the lifetime. And that's going to be instrumental as all of us are building trust in our projects to being able to deploy at scale, and for all of us to enable what we want to see, which is the grid of tomorrow.
Yeah, absolutely, absolutely. And Brett.
Yeah, I mean, I think some great points have been made here today, and thanks, Andre and Alex, for inviting us all to this panel. You know, I think I would just leave it with, we're in a truly exciting time for LDES specifically, but the energy storage industry more broadly, where there's a lot of activity happening. There's a lot more need for our technology. Developments continue, and investors and developers continue to understand the need for this technology, right? A lot of forward-thinking players are factoring it into their long-term strategies, and that's incredibly exciting. I got into this industry about a decade ago, just as energy storage itself was really starting to take off around the world, and now I think we've reached a similar point for LDES. So I think the next decade is going to be incredibly exciting for this industry.
Yeah, great. And Alex, if you could give us a kind of closing thought from the LDES Council itself.
Thank you so much, Andre. I mean, I echo everything that's just been said. If you look at where the world is heading, if you look at what we need, if we want to have a low carbon, resilient, competitive energy system globally, we're going to need vast amounts of LDES. That's really, really clear. I don't think there's any analysis that will point to that. You can argue how many terawatts that is, but it's terawatts, it's huge numbers needed. We've got clearly work to get there. Which technologies, are going to get there to be on the podium, as I think it was Manny said, alongside demand, to be seeing great companies on the call today who I'm sure will be leading the charge. But there is huge potential. It has to happen. It will happen, and we all look forward to playing our part in that particular journey. And thank you again for letting us speak today.
No, it's been an absolute pleasure and a fantastic conversation. So I want to thank you all very much for joining, and we'll be in touch. Thank you.
Very much.
Thank you.
Bye-bye.
Thanks, everyone.
Thank you. Bye.
Bye.